The Canadian National Railway is one of the most important companies in Canada, and their earnings are essentially a test of how the Canadian economy is doing. Welcome to Golden Larch Investing. My name's Liam, and on this channel we talk a lot about investing in Canada. And today specifically we're talking about the Canadian National Railway's recent earnings, trying to understand what they're saying about the economy, how we can use that information, and why this company is one of my personal favorites for a long-term investment. So we're going to start off just by talking a little bit about Canadian National and how they've been doing as a railway. If you haven't heard about them, then you're probably not Canadian. They're basically synonymous with Canada, especially if you live anywhere west of Ontario. However, over the last couple of years, there's been some tough stuff. First off, inflation. It has reduced demand on all sorts of things. Second off, obviously, the Canadian economy is struggling. And then third, obviously, COVID. Lots of stuff has happened in the last couple of years, but that hasn't stopped me from adding this company to my Larch fund, my big earnings fund. So you might be wondering, okay, what's happening in this earnings and why is this important enough that I would make a video? Well, the earnings themselves are actually pretty good. They beat on revenue and earnings per share. Just by a little bit, but still, they beat. And yet their stock did go down. It went down thanks in large part to sort of depressing forward-looking statements. They looked at the economy, they looked at how things were doing and said, yeah, I don't know that this is going the way we want it to. That's not a good sign for investors. However, like I said, they did beat on revenues and earnings per share. So why? Why did they beat on revenues and why did they beat on earnings per share? Well, it comes down to a couple of things. The revenues, basically, if I toss this up on the screen right now, they were flat for petroleum products, down for metals and minerals, flat for chemicals and plastics and forest products. But they were up for grain. And that's due to a big capacity and good crop production in both Canada and the parts of the US that sort of are served by CN. But I do want to sort of look at this sheet. This is straight from their earnings report. I do want to look at some of the things they're saying. So they mentioned a slowdown in frac sand and softer market demand for metals and minerals. That's not a good sign. They talked about lower crude shipments and lower natural gas. Also not great. Talked about lower potash, and then big one at the bottom, looking at those consumer products, plant retooling and rising dealer inventories for the automotive sector. So they're kind of saying, hey, people aren't buying vehicles. That's not good, obviously. And so there's a couple thoughts that I have when I look at this. I think number one, they're talking about why the economy isn't doing well. They're not talking about, hey, we messed up. They're not saying, oh, it's really tough out here and our competitors are eating our lunch. They're saying, actually, no, the economy isn't doing well. That's the only reason we're down on these sectors. They're also still pretty much running at sort of their expected capacity over the last little while. They've been doing good. They've been doing just fine. And considering the economic climate, they're beating on revenues. It's awesome. One bright spot that I haven't mentioned so far is earnings per share. And a large part of that is because they've been doing a huge amount of buybacks. And I thought this was a really interesting thing I wanted to dig into, because when a company does a buyback, they're essentially saying one of two things. So either one, our stock is too low and we want to own more of it, and our investors should want us to buy back more stock, increase their ownership in the company because right now it's a discount. Or two, we have nowhere to put our money. We have no idea what to do with it right now. There's nothing we can invest in that's going to have a better return than just buying back shares. That could be either a great or a terrible thing. Another thing I noticed, however, is their operating ratio, which is almost like the opposite of operating margin. Their operating ratio went up, bad thing. Only went up by 1%, and there were two big things that happened in this quarter that I think justify this. First, I made a video about this like right at the start of my channel here. There was a big strike. Big strike. Obviously, not a good thing for company earnings. Second, there were wildfires in Jasper, which is sort of along a really, really important CN rail line. And so obviously that's going to have some sort of impact, probably more the strike, I would guess. But I don't know. You'd have to ask CN. Given that this operating ratio is down, this operating ratio is up, the operating margin is down, only 1%, even with these sort of challenging times, just shows me these guys are still able to execute even when there are challenges. So I'm pretty confident they're going to keep executing over time. And so I'm going to talk a little bit about why I own this stock, because I think that's sort of what this earnings made me realize. They're warning us basically, things are weak in some key areas of the economy, other things are stagnant, and most importantly, in this earnings report, they're cutting some staffing so that they're sort of cutting their expenses. They're putting some locomotives basically to rest. It's like, all right, we're going to put this to the side. They're deferring investments. They're deferring infrastructure. They're saying things are going to get tough. They're anticipating reduced demand. That's not a good sign for the Canadian economy. And as somebody who's so invested in the Canadian economy, I should probably be scared, right? Well, honestly, I'm not. Because to me, seeing them mention this, seeing them say, hey, the Canadian economy isn't looking great, and we think this is going to have a material impact on our stock price. We're expecting our earnings per share to only grow by single-digit percents, and considering the buybacks, that's basically not grow at all. So they're warning us the Canadian economy isn't okay. Things are not going well. And yet, they just beat on their earnings. Their stock price is shaky, sure, but they're still bringing in the money that they expect to be, or a little bit more in this case. They're still increasing their earnings per share. So per share of the company, they're earning more money, thanks in large part to them using some of that money to then buy back shares. But still, as an investor, as long as the numbers keep going up, that's a good thing for you. Well, I think that there's probably going to be a decrease in price of this stock in the near future. I think if I were a gambling man, I would guess that in a year, CN Rail stock is lower than it is today. And I also think that's more of an opportunity for someone like me to start dollar cost averaging into this company. Now, I've already started this. I've already purchased my first couple of shares. And I talked about that when I talked about the Larch fund, the first episode we did at the start of the month. And in just about a couple days here, when October wraps up, I'm going to talk about sort of where that's at. And I'm sure I'll have the opportunity to maybe grab a couple more shares. So why am I buying this company? Well, it fits my portfolio really well in a couple key ways. First, it's a really good bellwether for the Canadian economy. It's almost like I'm investing just in Canada in general, because these guys move so much of our natural resources. They move so much of our consumer goods. They move so much of our industrial products. A lot of things that move around in Canada, I don't want to say all because Canadian Pacific does exist, but a lot of things that move around in Canada move because they touched a CN rail train, because some component or some material was moved by rail in this country. It's a huge part of our economy. It's historically significant. It has to do with where places are in the country, right? Like CN Rail is almost a part of Canada. And so investing in it is almost like investing just in Canada in general, which is one of the goals of the Larch Fund, is to be investing in Canada. But almost more importantly, because it's such a crucial part of our country, because this infrastructure that has been built over literally centuries is so crucial for how we operate, it has an insane moat. They exist in a duopoly with Canadian Pacific Railway, and there is no chance for another company to catch either of these two players in the near future. And not without an insane amount of expenditure and loss for what probably wouldn't end up being a worthwhile return for a potential disruption. So they're essentially guaranteed to be at worst the number 2 player in Canada. Guaranteed, even with terrible management over an extended period of time. That sounds really compelling to me because they're also a company with a 25-year track record of growing their dividends. That's huge to me. That shows me that they're going to continue to grow that dividend over time. And the shares I'm buying today are going to be yielding great numbers in 20, 30 years by the time I want to be pulling money out of this portfolio. That's awesome. And it's a great way for me to sort of take advantage of that get rich slow mentality that I'm really going for in this portfolio. It just makes sense. Now, like I said earlier, I do think the stock is going down. So I am not recommending anybody rush in there and buy this stock now. And I don't think this video is going to change your mind about CNR. But I do think that the Canadian economy is in for some trouble. I think these guys are warning us right now that they see trouble on the horizon and that both their investors and others considering investing should be expecting things to get worse. But that doesn't mean they shouldn't invest. Because as things get worse, your dollar goes further, you get a discount on the shares, you can pick up more of them, you can build a real position, and then as the next cycle hits and things start going up, all of a sudden, all of that work and all of that money will seem very, very much worth it. Now, that's just my opinion. If you think I'm wrong, or if you want to share something that you think I've overlooked in either this earnings report or just sort of the economy in general, let me know. Would love to hear from you guys. Leave that in the comments down below, and just let me know. Like, what do you think? And if honestly, if you think that Canadian Pacific is a far better investment, which I respect, if that's your opinion, let me know why. Because it's not too late for me to have a position in CP, right? I personally am picking CN just based on a valuation number. And CP already has this growth baked in. I think things are going to be tough. It might not live up to that growth number, but I might pick up both. And then I'm guaranteed to have both of the biggest players. Because again, like I said, having a railway in Canada, it's one of the easiest investment decisions of your life. There is no way for somebody to compete with them within the time span that I'm interested in investing for. So if you found this video interesting, please leave us a like, subscribe to the channel. We talk about stuff like this, Canadian companies, every single week, sometimes twice a week. And we have a video coming up just on Sunday this week, talking about the Larch Fund, which is my own personal portfolio I'm building specifically about investing in Canada. And we're going to talk about a couple things. We're going to talk about new stocks that are making it to the fund. And we're going to talk about why people should maybe make sure they own both Canadian and American investments. Interesting topics, at least to me. And I hope I get the opportunity to share them with you on Sunday. With all that being said, I'll see you in the next video.